Is UNH a buy, a hold, or a sell? And what is going on with the stock? Why is it down so hard? Is the stock broken or is the company broken? I'll break it down for you and provide both fundamental as well as technical analysis. Let's go. You can see UnitedHealth Group down 16% today, $317.52 a share. Now, the 52-week high was $630.73. And you can see this tweet from Brian Sullivan from CNBC. UnitedHealth on pace to lose over 40% of its value in 6 months. It's a member of the Dow 30. Not sure seen anything like this in a long, long time, if ever. Well, the reality is it's down 47.58% in the past 6 months. But that was based on a $605 share price. And just a month ago, the stock was $600 a share, $599.47. So the reality is this stock is down almost 50% in the past month. So you're sitting at your computer and you're thinking to yourself, well, that's great, Eric, but why is the stock down almost 50%? And tell me, should I be buying shares right now? Now, before somebody drops a comment, all right, I understand that over half of you are watching from your mobile phones, your cell phones. It's all good. I got you covered either way. Now let's get to the good stuff. A series of events that really started right here. UnitedHealth says a hack at tech unit impacted 190 million people. And this is the largest healthcare data breach in the United States. Now keep in mind, this happened a while ago. It was first detected February 21st, 2024. But it's been an evolving story that's gotten worse over the past year. So if you're trying to figure out why a stock is down 50% and why sentiment's bad, here's a good starting place. But wait, there's more. DOJ launches UnitedHealth billing probe. Wall Street Journal reports insurer says it's unaware. This was February 21st, 2025. So medical billing probe. Investigation examines Medicare Advantage billing practices for extra payments. Analysts say uncertainty weighs on shares. And the stock was down 7.3% on this news. And unless you are living under a rock, back in December, you probably heard about Brian Thompson. That was the CEO of UnitedHealth's insurance unit outside a Midtown Manhattan hotel. Now, I'm not going to get into this too much, but there was a lot of social sentiment tied to the stock because of the situation. A lot of opinions came out on the internet about this topic. And I think most of you guys understand what I'm talking about. There's no question this has a serious impact on sentiment. It really started in 2024 with the cyber attack, and this dumped fuel on the fire in December coming into 2025. Now, with that said, the stock started to recover, but unfortunately, things kept getting worse for UNH. Now, this right here is an impressive stat. So Whitty, who was the CEO until just now, I'm going to update you on the CEO situation in a second. He was at the helm in April. So this most recent earnings report for UNH, this was the first earnings miss since the 2008 financial crisis. So it was a miss, plus they lowered its annual outlook because of higher than expected medical costs, as well as unanticipated changes in its Optum subsidiary. So this is where things got really bad. We had a miss on the top and bottom lines. Now the positive here is you still had 9.8% year-over-year revenue growth, but it missed by $2 billion. So a double miss as well as lowering guidance. And now you're thinking, how could it get any worse? How could the stock be $316 right now? Well, this ought to do it. UnitedHealth Group CEO Andrew Whitty steps down and the company suspended annual forecasts, the forecast that they already revised down.
Breaking news, UnitedHealth says Andrew Whitty stepping down as CEO, saying for personal reasons, board chairman Stephen Hemsley is taking over as CEO and will remain chairman.
Wow.
Whitty will stay on as a senior advisor. The company has suspended its 2025 outlook, saying medical expenditures are now expected to be higher than it had anticipated. UnitedHealth says it doesn't expect to return to growth in 2026. I think Whitty's, what did we decide? He's 60 years old, so it's not...
And by the way, the losses you're seeing right now, down 4.5%, are on top of the declines that they were seeing yesterday during the session, because the pharmacy benefit managers are really the ones that took this on the chin yesterday after the president's executive order came out on the drug pricing, because it looks like the pharmacy benefits managers are the ones that he was kind of targeting most heartily.
I could be wrong. Did they say they don't believe that they're going to be profitable or return to growth, or they said that they do believe? I believe that they do believe that they're going to be return to profitability in 2026. They're just not providing the guidance. I mean, the sort of bigger guidance.
Okay,
or the more minute guidance, maybe the way to say it.
But it was a couple of weeks ago, remember? The Dow was down 800 points because of UnitedHealth. It was down like 100 points or something. So they miscalculated on something, and then you had
And Scott Gottlieb talked to us about it. The idea that the expenditures are going to be much more than they had calculated, which is surprising.
If you look up UnitedHealth CEO, Andrew Whitty doesn't come up. It's all about the poor guy that was.
By the way, he's saying he's leaving for personal reasons. Think about the stress of what the last year must have been like.
Right.
I mean,
probably,
genuine, on so many scores.
Right. Probably looking around a lot before he gets out of a.
Coming up.
So now we have what's called a plethora of bad news, and the sentiment couldn't get any worse. Whitty will act as a senior advisor, and Hemsley, who served as UnitedHealth Group CEO from 2006 to 2017, well, he is now appointed as the new chief executive officer effective immediately. This is a pretty radical rip and replace. Now, according to this release directly from UNH, it says that the CEO, Whitty, is stepping down for personal reasons, but I think we could all make an argument that's probably not the case. Now, the one positive here is the company expects to return to growth in 2026. The problem? Well, it's May 13th, 2025. Wall Street doesn't care about next year. They're focused on 2025. So when you think of hedge fund managers and institutional investors, they're not thinking about, hey, which stocks are great to buy right now for the next 2 years. They're thinking about, what stock can I buy right now that's going to do well? This does not have anything going for it. The sentiment's bad. Everything's bad. There's no momentum here for this stock to do well in the short term. And now you're thinking to yourself on your phone, great, Eric. Well, that doesn't really sell me on why I should buy UNH stock right now. Well, here's the thing. The company is not going anywhere. This is one positive here. UnitedHealth Group has tremendous opportunities to grow. We continue to help improve healthcare and to perform to our potential. And in doing so, return to our long-term growth objective of 13 to 16%. Now, if you think that UNH is going to go out of business, you probably have a lot bigger problems to worry about because the economy is screwed. UNH is number 5 on this list with 400,000 employees. So the 5th largest employer, at least publicly, in the United States. So over 400,000 employees rely on UNH. You can see the stock right now, guys, down 17%, $313.78. A reminder, this was a $630 stock not that long ago. So the market cap is down to $286 billion. The PE ratio, this is a TTM non-GAAP, 13.13. The dividend yield is at 2.68%. So next I want to look at some metrics on Seeking Alpha, including profitability and valuation. Keep in mind, some of these metrics could be impacted because we know that guidance just got slashed. But generally speaking, UNH has been rocking an A+ profitability grade. Being in insurance, it doesn't have a huge gross profit margin, around 22%. But things like cash from operations is very impressive, $28 billion. And it's bringing in a net income per employee around $55,000. Now, growth you saw earlier, 8-9%, it's not bad for what you get. This is not a growth stock by any means. It's more of a DGI stock. And this is where it gets really interesting. The non-GAAP PE ratio, TTM, 13.55. If you look at the PE gap, TTM, that's a 0.36. The forward PE gap, 15.19. Price to sales, 0.85. Forward price to sales, 0.76. Guidance was cut, so these numbers could be adjusted. But again, this is paying a 2.68% dividend. You'll notice here this is not updated, just ignore that. The payout ratio is a 30%. The 5-year growth rate, 14.22%, and it's had dividend growth for 15 years. Now, the dividend safety is an A, and I have no concerns about UNH continuing to pay its dividend. If you're looking for a DGI stock that's potentially undervalued, this could definitely be your huckleberry. I posted this earlier today in our Discord. I thought I'd share with you guys on YouTube as well. And this is really to show you how beaten down the stock really is. So I went long back in 2017, September 6, 2017. I bought 35 shares. The average cost base is $197.75. So those original shares at the time I posted this were only up about 60%. And that's in 8 years. Of course, not that long ago, the stock was almost double the price. Now, with that said, a $6,921 investment, it's worth $13,197 even after the massive sell-off. And that's with drip compounding or dividend reinvesting. So it's not excellent performance. It is a small position in the portfolio. It's about 0.5% of the portfolio. I've also been buying this in the dividend portfolio, and it's been a falling knife. I've been dollar cost averaging on the way down. So I bought one at $3.35 a share, another share at $329.97, another share at that $325 level, and just filled another share here recently at $317.77. I think my next order is actually in at $307.77. And we're going to look at a chart next. I'm going to tell you where I think the stock could go. Now, before we do that, there's a couple things I want to show you. And this is going to be the historic PE ratio. You can see right now it's showing 15.85, and this could have some delay in it. But last fall, when we topped out at the highs, the PE ratio is 37.73, the highest it's ever been. If I look at where it's showing now, 15.85, you can go back to 2019, it was 16.81. We can go all the way back to 2015, and the PE ratio was a 17. We really have to go back to 2013, 12 years ago, when we get closer to that 10 PE ratio. So it's safe to say over the past 10 years, you can see here on March 31st, 2015, it was 16.75. So when you go back a decade, you're basically in the same PE ratio as we are right now. Now, keep in mind, this was coming out of the financial crisis, so a lot of stocks had suppressed PE ratios. Now, of course, you never buy off analyst price targets, and some of these could be revised down in the next couple of days. But you're looking at 22 buys, 3 holds, and 0 sells. The highest price target, $700, the lowest $490. It's trading at $312 a share. So the average upside here is a 78.9%, $559. Now, what's crazy about that is Morgan Stanley actually came out 2 hours ago and maintained UNH stock with a $563 price target. So Morgan Stanley reiterating overweight and price target $563. And UNH maintains strong fundamentals with a PE ratio of 15.75 and market cap of $343 billion. Well, we know that's lower than that because the stock has sold off hard even since this came out. Again, current market cap is $286 billion. So just in November, UNH, a $630 stock, has fallen all the way down here. Insane levels. In fact, this S3 is $267.57. The S2, which we were definitely under that now, was $346. And as I'm speaking, we're at the daily low. There's about an hour and 15 minutes left in the trading day. Where's the stock headed next? Is it a buy right here? As I mentioned earlier, I like to use dollar cost averaging, so I buy on the way down. And some people, that doesn't work for them. They want to try to time it. Be my guest. What works for me works for me. I've made millions in the stock market buying the way I buy. Just in April, bought the entire way down. Now I look at my portfolio, it's greener than it's ever been. Was it perfect? No. Is it going to feel painful when you buy some at $335 and it goes to $300 a share? Yes. But I feel if you're buying it right here, right now at $311, and I was buying it even higher than that, and you dollar cost average, that you'll be in good shape if you're holding this for 2 or 3 years. I'm not expecting this to go back to $500 anytime soon. But let's say it does go back to $600. And even if it takes you 2 years, you're talking about doubling your money from here. I think there's a low chance you're going to see 267, but it's certainly possible based on the charts. Again, this is a Fibonacci S3. I feel like psychologically, you'll probably get buyers come in that $300 level. So could it break $300? Probably. And maybe it gets to something like 285, 295. It's hard to say. It could bottom anytime. The question is it a buy as a long-term investor? There's definitely risk to consider, and the stock could go lower, but this is the best price you're going to get on this stock in over a decade with the highest yield in that time. So I rate UNH a buy. And yes, I understand there are risks, and I understand the stock can go lower. But when I look at the opportunities that are in the market today, this is one of the better opportunities that's in front of you. I'm buying in the dividend portfolio. Many of our members are as well. In the end, do what's best for you and your money. Thanks for watching. Make sure you subscribe if you're new here. Drop me a like, drop me a comment. Have a great rest of your day. Take care.